I would like to discuss real asset investing, how to build wealth with tangible assets. A real asset investing involves putting money into physical assets that have intrinsic value and can provide returns through income generation or appreciation. Unlike financial assets like stocks and bonds, real assets offer a more direct investment in physical goods. When it comes to real assets, we are investing in real tangible assets like buildings, like real estates. These are typical examples of real asset investing. So we want to look at the key types of real assets. What are the key types of real assets? So you have number one, real estate. So investing in residential, commercial, or industrial properties. This can include direct ownership, rental properties, or real estate investment trust. These are typical examples of real assets. It might be commercial real estate. It might be a residential home. And you can equally invest through real estate investment trust. Number two is commodities. Investment in physical goods such as gold, silver, oil, natural gas, agricultural produce, and precious metals. Number three is infrastructure. Investment in physical structures and facilities like bridges, roads, and energy plants that generate steady cash flow. When you invest in maybe a nuclear power stations, in a utility, these kind of investments are examples of real asset investing. We also have number four, timberland and farmland. Investing in land used for forestry or agriculture, which can provide income through the sale of timber or crops. You can equally do what is called land banking. Land banking involves buying land with the expectation that in the future, in the near or distant future, the price of land will appreciate, and then you will dispose at a huge profit. We want to look at the benefits of real asset investing. What are the benefits of real asset investing? Number one is inflation hedge. Is that it provides that hedge against inflation. Real assets often appreciate in value with inflation, providing protection against inflation inflation pressure. You discover that the more inflation tends to kick in the economy, the more the value or the prices of these real assets tend to increase. So it's a considerable hedge against inflation. Number two is income generation. Many real assets like rental properties and farmland generates regular income stream for their investors. You want to be able to have regular income coming in, then this kind of investing is for you. You can invest in real estate, investment trust that pays you regular dividends. Once they collect rents on the property, the amount involved is passed, down to you as an investor. Number three is diversification. It provides exposure to different types of assets that may not correlate directly with traditional financial markets. By investing in this, you diversify your portfolio away from traditional investment strategies. You equally have number four is tangible value. Direct ownership of physical assets can offer a sense of security and intrinsic value. For the fact that you own a physical asset, it gives you that security that actually I can see my investment. I can really get to have should I say interaction with your investment. Unlike stocks, you simply buy a piece of paper in the market. But when it comes to real assets, you can see what you're investing in, like a physical structure. Then let's look at the risk involved in assets and real asset investing. Number one is illiquidity. Real asset can be, harder to sell quickly compared to financial assets. It's very difficult to sell compared to, financial. You can very easily sell stocks, but it's not easy to sell a house, a home. It's difficult. It takes time. A home will be listed for 3 months, 6 months without being able to get, disposed of. So that's the illiquidity we are talking about. Number two is a market volatility. Market volatility, prices of commodities and real estate can be volatile and affected by, market conditions and economic cycle. Depending on the market cycle, it may be difficult to be able to easily dispose a house, dispose a piece of real estate. Sometimes it's buyers that will price at that will give you the right price, are difficult to come by. Number three is management and maintenance. Physical assets like real estate and farmland requires ongoing management as well as maintenance. Even when you have tenants in the property, you still have to continue to maintain the property. So, and if you have the many properties, you need to be able to either hire a professional manager or you manage it yourself, which might be tedious dealing with tenants. Some of them may even drag you to court, for demanding your rent. So the number four is high entry costs. Investment in real assets often involves substantial upfront capital and transaction costs. So it's not for everybody. It's for those who have the wherewithal, the money, the resources, the capital to invest and to take opportunity and to take advantage of this particular opportunity. We want to see examples of these strategies. We have direct ownership, buying physical properties, land, or commodities. You can practice this, you can adopt this strategy by directly buying the underlying assets we've earlier mentioned. So buying physical properties, you can buy land, or you can equally buy commodities. So another example is REIT, Real Estate Investment Trust. Investing in real estate through publicly traded or private, real estate investment units. When these companies are there, you buy, they use your money to add to other people's money and buy a home. And when the rent comes in, you stand to benefit, you stand to have your own cuts of the profit. Another example is commodity funds. So investing in funds that hold physical commodities and commodity futures. You buy a fund whose team or whose central focus or whose management team, are really, focused on buying commodities and nothing more. You see. Number 4 is infrastructure funds. So investing in funds or partnership that owns and operates infrastructure projects. These are to typically get involved in real assets invest. You may not really invest directly, but you can invest through funds that specialize, in this kind of investing. Please don't forget to give this video a thumbs up, like it, and subscribe to this channel. It will really help me tremendously.